What happens if you're involved in a car accident and thankfully you're not injured, but after the accident, you discover that your car is completely totaled? There's no value in fixing it at all. You then realize that you still owe a substantial amount of money on the car loan or lease. How are you going to pay that off and cover the amount that you still owe? Or what happens if your car's stolen, but you still owe money on your loan or your lease? You're still going to have to cover the amount that you owe to pay off the lease or the loan. The right insurance can help with this, and it is number one in a 3-part series of our top 3 most overlooked coverages in auto insurance policies. Number 1 is coming up right now, and I'm going to use a personal story to illustrate it on this episode of the How Insurance Works podcast.
Welcome to the How Insurance Works podcast. The content in this podcast should not be considered insurance advice and is for general informational purposes only. Insurance forms and endorsements vary based on insurance company, changes in addition dates, regulations, court decisions, and state jurisdiction. So please consult your agent for further advice. And now back to How Insurance Works with Mike McGilvery.
Welcome to the How Insurance Works podcast. Thank you for tuning in. If we have not yet met here, my name is Mike McGilvery. I'm a second-generation licensed agent and broker at Shaw, Moses, Mendenhall & Associates in Southern California. My goal is simple. It's to help educate and inform on various aspects of insurance and the insurance industry to help you make better informed decisions. In this and the next 2 podcast episodes, we're going to talk about the top 3 most overlooked coverages in auto insurance policies from our experience. This is by no means a statistically verified list. It's simply our 3 most overlooked coverages that we see in auto policies when working with new clients. These are coverages that we generally need to educate new clients on because they aren't aware that these coverages exist. Let's go back to the 2 situations we alluded to in the beginning of the podcast. You're involved in a car accident. Thankfully, you're okay. But after the accident, you discover by one of a few different ways that your car is completely totaled. I say by one of a few different ways because either by looking at the car, you know it's completely totaled and you know what the insurance company is going to say, or you put in a claim with your insurance company and they tell you that they are going to total out your car. An insurance company can do this and total out your car if the cost for the repairs and its salvage value exceeds the actual cash value of the vehicle, and different insurance companies have different ways of doing this. But either way, your car is totaled and now you have a problem. You still owe a substantial amount of money on the lease or the loan that you took out to pay for the car. How are you going to pay off that lease or loan amount? How can you pay it off without hopefully paying any money out of pocket? And what happens if your car is stolen? Well, the theft is likely covered under the comprehensive coverage in your auto policy, and most lenders do require you to have collision and comprehensive coverage if you're leasing or financing a car. But the car's stolen, you no longer have the car, and you still owe money on a lease or a loan. How can you pay off that lease or loan amount so that you don't have to pay it out of pocket? The right coverage can help with this, and it is one of our most overlooked coverages in auto insurance policies. It's called Loan Lease Gap Coverage, and it's a coverage that's recommended if you're leasing or financing a new car. In this podcast, we're going to address what Loan Lease Gap Coverage is, when to consider it, where to buy it, and what it might approximately cost. So what is Loan Lease Gap Coverage? Gaap stands for General Asset Protection Insurance, and it's usually available if you're the original loan or leaseholder on a new car. Gaap insurance is designed to work along with your collision and comprehensive insurance. It's appropriately named Gaap insurance because it's designed to fill a gap. What gap is it designed to fill? Let's say your car is totaled in an accident. Under your collision or comprehensive insurance, depending on the cause of the accident, your insurance company is going to give you a salvage value for your car. Maybe it's car parts, but it's the actual cash value of what's actually left on the car. And in the case your car's stolen, under your comprehensive coverage, your insurance company will give you whatever the actual cash value of your car is at the time it was stolen. So you're going to get some value for your car, whether it was stolen or whether it's totaled. But you still owe money on your lease or your loan. The Gaap insurance is going to cover the gap or the difference between what you get for your car, which is going to be a depreciated amount, and the amount of money you owe on a lease or a loan. So it is going to cover the difference between whatever you get for your car and whatever is left on your lease or your loan. Remember, cars do appreciate quickly, and whether you lease or purchase a new vehicle, there is often an imbalance in the cash value for your car versus what you actually owe on the loan or the car lease. As a brief example, let's say you bought your car for $36,000, brand new, and you owe $31,000 still on the car. The car is totaled, and the actual cash value of the car is $25,000, because we're going to have some depreciation. You may have to pay your deductible under comprehensive or collision insurance. So let's say that after you pay a $500 deductible, which is a pretty average deductible, you end up getting $24,500 for your car. But you still owe $31,000 on your car. There's a $6,500 gap between what you got for your car and what you owe on your car. And this is what Gaap Coverage is going to take care of for you. Now, we like using real-life examples when we can at How Insurance Works. So I want to illustrate Gaap Coverage using a personal example when a family member of mine, unfortunately, was hit on the freeway. Thankfully, he was okay, but his accident was bad. His car flipped several times off the shoulder, and his car was totaled. We're going to show actual policy correspondence and Gaap insurance paying off his gap in the video version of this podcast, which you can watch on our website, howinsuranceworks.co, or How Insurance Works Facebook page, YouTube channel, or our Instagram page at how_insurance_works. But my family member was hit on the freeway in Southern California going about 65 miles an hour, and he was hit hard enough by a car behind him that his car veered off the shoulder, flipped several times, and finally came to a stop. It was a hit and run, and of course we were grateful and thankful he was okay, and his 50th anniversary Ford Mustang really did a remarkable job of keeping him safe. All the airbags deployed, and it was actually his car that helped him call 911 after the accident, so I do have to say hats off to Ford for their safety features in that particular car. However, after the accident, his insurance company decided to total out his car. At the time of the accident, he owed $21,283.78 on the car. The salvage value he received on the car was $16,138.78 after paying the $500 deductible in his collision coverage. This had to be placed under his collision coverage because the driver that hit him wasn't identified and the deductible had to be paid. So he had no car, but he still owed money on the car he no longer had. The gap between what he owed on the car and what he got for the car was $5,145, and some adjustments were made for taxes and registration fees. But his Gaap coverage took care of the rest, and this will be shown in the video of this podcast, but I'm going to quote the resolution from his insurance company. Quote, "In accordance with the terms and conditions of the Guaranteed Asset Protection Agreement and disclosure, an adjustment of $5,807.64 was made to your loan. Your loan balance has been paid in full." End quote. Without the Gaap coverage, my family member would have been out of a car and also would have still owed $5,807.64 out of pocket. That was the gap. And the gap amounts can be larger or smaller depending on the situation. So if you are leasing or buying a new car, Gaap coverage is certainly a coverage to consider. If you're leasing a new vehicle, many lease contracts, either include Gaap coverage or they're going to require it. Some financing contracts require it, and if they do, some make it very clear that it's your responsibility to buy Gaap coverage, either from the dealer or from your own insurance company. The current finance contract on my car right now does require me to have Gaap coverage. So when should you consider Gaap coverage? Well, anytime the auto loan exceeds the value of the vehicle, certainly. If you purchase a new car with little or no down payment or less than 20% down, Gaap insurance has a lot of value in that situation. Gaap insurance is also really helpful for cars that are financed for more than 4 years or 48 months. If you finance a car for a longer term, the amount of time you owe more on the car than it's worth is much longer. So Gaap coverage can be very helpful there. And with lease agreements, many of them are going to require you to purchase lease Gaap coverage. So is there ever a time that we don't need to consider Gaap coverage? Absolutely. Anytime the value of the car exceeds the amount owed, you don't need Gaap coverage. If you finance your vehicle short term, maybe 6 months or a year, maybe you pay it off really quickly, you may not need Gaap coverage. Your contract could also have a Gaap waiver. Now, they're not that common from my understanding, but this is where the lender agrees to waive the difference between the actual cash value of the car and what you owe in the event of a loss. So it isn't always needed, but it certainly is in most cases, especially if you are buying or leasing a new car. Where do you find Gaap coverage and what does it cost? Many auto dealers are going to offer Gaap coverage, so you can purchase it from your dealer, but keep in mind, Gaap coverage is generally more expensive through a dealer than through your own insurance company, so it may be more cost-effective to get Gaap insurance through your insurance company. Except, some insurance companies don't offer Gaap coverage, so check with your agent to see if yours does. If the particular insurance company that you and your agent are working with doesn't offer Gaap coverage, ask your agent to perhaps find a company that does offer Gaap coverage. And what does Gaap coverage cost? Well, the cost of Gaap coverage at dealers can vary, but most of the insurance companies our firm works with do offer Gaap coverage, so I can speak to the cost there. I can show you an example from a policy we recently wrote for a client who is leasing his car, and you'll see an example in the video version of this podcast. Will show the actual cost of the Gaap coverage. Gaap for this particular client for a 2020 new car is only a $20 premium for the year. And a $20 premium for the year is certainly worth it and saving potentially $5,000 or $6,000 or more in the event of a loss. So for $20 in premium a year is certainly worth it in a potential situation where he could have a $5,000, $6,000 gap. So if you're financing or leasing a new car, have a conversation with your agent about Gaap coverage and talk to your dealer as well. Compare each offer, pick the one that works best for you, but at least have the conversation to see if it's right for you, because it is one of the 3 most overlooked coverages in auto policies that we typically see. I can tell you that my family member was sure glad he had Gaap coverage for very, very little premium. He saved almost $6,000. We're going to cover our number 2 most overlooked coverage in auto policies that we see next week in our podcast, but I do hope this podcast was helpful. If you have a what-if situation for us, let us know. Visit howinsuranceworks.co. You'll find our email link there. Email us, and we may feature your question on a future How Insurance Works podcast. You can find our other social media links on howinsuranceworks.co, or visit us directly on our Facebook page, How Insurance Works, our YouTube channel, How Insurance Works, or Instagram at how_insurance_works. To reach me directly to ask a question or leave a comment, feel free to email me directly at mikemac@howinsuranceworks.co. That's mikemac@howinsuranceworks.co. Stay safe out there, and we'll see you on the next one.